Hong Kong's real estate market remains cautious in the second quarter of the year, with distressed assets taking the lead in transactions. To expound on this, we have Kathy Lee from Colliers. Kathy, how do distressed sales impact market sentiment and which sectors are most affected?
I think it's more the other way around. So it's like actually the market sentiment in the investment markets has been remained subdued. So and that's why we have seen more distressed a property putting onto the market for sales. According to in terms of the sectors, we've seen a lot a more affected in the office sectors maybe in last year, in the second half of last year, and also beginning of this year. But and when we are entering in the second quarter of this year, we actually see more distressed sales in the retail market as well. I think that may be due to a relatively slow recovery in the retail leasing market.
So, amid declining domestic spending and increased outbound travel, how are retailers adjusting to rising rents?
Yeah, actually, you can look at the retail leasing markets in two segments. We have the high street shops in the traditional shopping districts Central, Tsim Sha Tsui, Causeway Bay, and Mongkok. And we also have the neighboring retail markets, which is including those street shops like neighborhood centers and also those shopping mall within the neighborhood districts areas. I think in terms of the high street shop rental, we actually seen an increment since the border reopened. And the retailers, and I'm still very interested in expanding in these locations because since the border reopened, we are seeing the return of tourists and actually help the business within those areas. And the retailers have been able to attract more business, and they are able to to accept the slightly increment in the rental levels. And but on the neighborhood segments, we actually haven't seen a lot of a rental growth in those areas because those areas are particularly affected by the outbound traveling of Hong Kong residents. So we actually see a polarization in the retail market. And in terms of high street rentals, even though I mentioned there are some rental growth in the past 1.5 years, but the rental levels is still relatively cheap or lower compared to the pre-COVID periods. If we are comparing the high street rental level to the pre-COVID periods, there are still around 20 to 25% of discounts from the levels of 3 years ago.
So, we understand there's still increased duty-free allowance for mainland residents, right? How or what effect will this have on high street retail?
Yeah, we're actually welcoming for the government to increase the allowance for the mainland visitors for going back to China. But however, the amount is not very still not very high enough because when you are talking about we are just talking about 15,000. If you are buying a luxury handbags, they may still subject to a taxation or custom for any luxury goods. That maybe have some help or support to the mid markets in the retail market, but for the luxury market may not be greatly benefit from this increase in the custom allowance.
Thank you so much for your insights, Kathy. We are looking forward to having you back on the program.
Okay, thank you. Thank you very much.
Once again, that was Kathy Lee, Head of Research at Colliers Hong Kong. For more news, visit hongkongbusiness.hk.